banking, specifically how to get a credit card for the first time. So anyone, if you've been in the country for a couple of months or even years, you've got or you moved here from a different country, the website, and this isn't a paid advertising in any case, it's just that over my experience in the financial industry, I have found this to be extremely helpful. So you're gonna go to a website called creditcards.com. So up at the top, they'll have like different links, and the links will include, let's say, bad credit, student credit cards, travel credit cards, 0% offers or whatnot. So you're gonna go into the alternative credit portion. You're gonna click on there, or other types, and they'll have a link there for, so it's going to be for secured credit card. Okay, so secured credit card is going to give you, just got back home, make a quick lunch. Secured credit card is going to give you the ability to get the credit card. And the way that it works is they're going to go through different ones on the website, by the way. One that I like is the Capital One. It's very simple, or the Discover card. But the way that these work is sometimes they have an annual fee, some of them don't. Please read the description, get familiarized. There's always phone numbers that are going to be added on there. So, call, ask questions, do a little bit of research on which one is best. The Capital One and the Discover card, I've had clients and people that I know that have used them to build their credit and to get their first credit card, and it's worked out nicely. So those are the ones that I'm a little bit more familiar with. So I would look at those probably first. So in the application, name, phone number, address, employment history, so on and so forth. You go through that. You'll submit it. You'll get a packet of information. And the way that a secured credit card works is, what happens is they're going to secure $200 to $300 to $500 of your money. So you're going to, they'll ask for you to send the money there, usually by direct debit from your account. So you're going to provide a routing number and an account number. They're going to take this security deposit, if you will, and hold that money, and then open a credit line for you in the same amount. So your credit card limit is going to be $200, $300, I think sometimes up to $500 only in the beginning. So what happens is, as you start using it, making payments on it, you're establishing your credit and your payment history. So there's a few aspects. Payment history, how many times have you paid something online? And then credit history. So from day one, the nice thing about the secure credit card is it'll report on your credit report the same way that any other regular card reports. So from day one on your credit report, you've got a credit card, right? So this is a big, check mark kind of thing. And then obviously later on, it's easier for you to get other credit cards. The first one's always the hard. Okay, so next, you get this credit card. You have this small limit. I understand it's small, but you got to get started somewhere. You start using it, right? To kind of, let's say, prevent you from maxing it out. What you could do is allocate a certain type of transaction expense on that credit card, be it office expense, maybe for your business, or groceries for personal, maybe only at the gas pump, or I would be careful on signing that card up, because you're not going to have it forever, right? Your goal is to kind of move forward. So I wouldn't give anyone this account number for them to charge, right? You don't want to do that. You don't want to give, let's say, utility, bill information on there, utility company, or internet service, or any kind of provider that's going to take the money out on a monthly basis. So you want to stay away from that, okay? Second, so make sure you spend less than half of what's on the card. So one of the aspects of building credit is the credit is going to monitor how much you use of the total amount that you have. So layman's terms, right? Easy math. If you have $1,000 limit on a credit card and you're using more than 50%, or really more than 40%, so more than $400 you're putting on the card, even if you pay it off at the end of every month, you're utilizing more than that percentage. So you're utilizing a higher percentage. The higher your percentage, the more risk, and hence it's negatively impacting your credit card and your credit history. So what you want to do is, the goal is to have multiple credit cards with high limits and hence overall lower utilization. So if you could get your utilization down to like 20, 15, 10%, now your score, guess what, is going up because you're not as much of a risk. So don't max out your cards is what I'm trying to say, and use less than half, or I would even say less than 40%. So that's why, going back to number one, I'm telling you to not use more than that on the card. So that's why I'm saying use, one type of expense, maybe only buy gas or whatnot, so that throughout, as you're buying gas and you're, let's say, going to school, right, you're filling up maybe once a week, $40 or $30 or whatnot, so you've used $120, $130 on your $300, $400, $500 credit card. That's going to be lower utilization. The thing with the first credit card is to get it open, use it, pay it on time. Those are really the top three things that you're trying to achieve with the first card.